As of today, May 5th, 2022, the average interest rate for a 30-year fixed rate mortgage is 5.58%. Yep. And just yesterday, the Feds announced they were raising interest rates another 50 basis points, which is the largest increase since the year 2000. Oh my God. We already have an inventory problem here in the country. Are these rising rates going to impact and steal more inventory from what's barely there right now? It's possible. When the rates started going up, I started to get concerned because I was thinking this could be a problem, not just for buyers, but for home sellers too, who are looking to trade up or downsize. And I'm going to explain to you why. And I found an article from Redfin that talks about just this very thing, about these rates impacting the inventory. So you're not going to want to miss this one. Let's get started. So I've been saying this, like I said, for the past couple of months, as soon as the interest rates started going up, that I don't think the inventory I don't think it's going to really improve now because of the rising rates. And here is why. And just what I'm going to show you in this article, because most homeowners have current interest rates that are far below what the rates are right now. So what's their incentive to go buy another house? It's just going to cost them a lot more money if they gave up their low interest rate right now. So let's get into this article from Redfin. So it says here, nearly 1/3 of homeowners have a mortgage rate far below today's level, prompting some to stay put. With mortgage rates surging, some homeowners who would otherwise be selling are staying put, as moving could mean losing their ultra low rate and getting stuck with a heftier housing bill. Yeah, I was afraid of this. So let's move on and see what else it says. About 51% of U.S. homeowners with mortgages have a mortgage rate under 4%, substantially below today's level of 5%. Well, as of today, 5.58%. About 1/3, 32% of all homeowners, including homeowners without mortgages, have a mortgage rate under 4%. With rates now at their highest level in over a decade, many of these homeowners may be incentivized to stay put because selling your home and buying another could mean giving up their ultra low mortgage rate and increasing their monthly housing bill. This may be contributing to a decline in home listings. Now, this makes sense. This makes complete sense. And look, we bought our house 10 years ago. My interest rate is 3.75. That was from 10 years ago. People said, well, do you want to sell your house now? Do you want to move? Like, first of all, no, I can't move. My kids are still in school. I can't make a move yet. But could I make a lot of money on my house right now? Yeah, probably. But where am I going? Where am I going? I'm going to give up that rate to pay a higher rate and to pay even more for a house. So I understand the thought process behind this. And look, last year with the prices rising and the rates were still low and people who needed to trade up, that was a perfect time. Perfect time to make a move. You're trading up or downsizing because you're making all this money. And then on the other end, when you get your new mortgage, you could have been paying maybe a little bit less. So right here, it says, the mortgage rates have surged as the government seeks to combat inflation. The average 30-year fixed rate mortgage hit 5% for the first time since 2011 during the week ending April 14th. That's up from a record low of 2.65 in January 2021. What? Oh my God, that's a big jump. That has helped push the typical home buyer's monthly mortgage payment to a record high of $2,288, up 35% from about a year ago. It continues on to say Redfin economists are watching closely to see whether the rise in mortgage rates has a measurable impact on housing supply, which is already at historically low levels. New listings fell 7% year over year during the 4 weeks ending April 10th. By comparison, they were only down 1% at the end of February before mortgage rates skyrocketed. But we're already seeing signs that the buyers are starting to back off a little bit, just a little. It says here, there are already signs that demand is starting to back off. Home sellers are increasingly cutting their list prices to find buyers, and Redfin has seen a drop in buyers requesting service from its agents in pricey coastal markets. Mortgage purchase applications fell 6% year over year during the week ending April 8th, and home touring activity is below last year's levels. Look, we've been anticipating this. When the rates go up, the buyers are probably going to back off because they lose their buying power. But I don't think people really thought about how this is going to affect sellers in making their trade up or downsizing. So here's the thing. Now, here's an example of a situation where a homeowner had the option to sell. They could have made a ton of money, but they ended up just doing renovations. Says here, ACOC knows of one homeowner who bought a Salt Lake City house for $235,000 in 2015 and was recently planning to sell, but chose not to, even though their home is now worth about $650,000. They opted to remodel instead because their current home has a mortgage rate of just 2.4%. Then they don't feel the equity in their current home is sufficient to cover the $850,000 to $1 million replacement home they want next, especially with today's higher mortgage rates. So that's another thing. People are going to stay put and just remodel. Look, I'm not here to scare you to say, oh my God, there's going to be nothing for sale. Here's the thing. So Redfin also provided a chart. It's a state level summary for the fourth quarter of 2021 showing the percentage of homeowners state by state who have mortgages below 4%. And this is really interesting. So they broke it down to share of total homeowners with mortgage rates below 4%. And they have a share of mortgage holders with mortgage rates below 4%. So if we take a quick look into New Jersey, this is really interesting. 50% of total mortgage holders have an interest rate of below 4%. That's 50%. People. I don't think those folks are going anywhere. But look, not all hope is lost. You know me. I try to look at the positive of this. So a couple things we all need to think about here. Number one is life. Okay. Life happens. Okay. People get a job transfer. People have to buy a bigger house. They start having babies and their family's expanding and they have no room. They have to get a bigger home. There are people who do need to downsize, the elderly that need to move to like a 1-floor living. So life happens. Will sales happen? Absolutely. But if you're in a position where you think you need to sell, you are going to need to make a move. Keep this in mind about the interest rates. Typically, when we have a recession, interest rates will come back down. And folks, the signs are pointing in that direction. We are headed towards a recession. I'm not a financial analyst. I'm not here to comment about, give my analysis about the economy. You ain't getting that from me. But the signs are there. We are headed towards a recession, probably in 2023. But if you were to buy a house, say this year, and your rates, you're paying between 5 and 6%, just know in the coming years, you probably can refinance that and get a lower payment. So you always have to think about that when you're going in to purchase a home. And the way the demand is and the competition is for a house these days, and if you're stressing about the rates, you got to remember, listen, you can get the house, the rates, the interest rate you can deal with later. You may have to pay a little bit more right now, but then down the road, you can eventually refinance and bring that payment back down. So this is something we need to watch for, folks. It's this is going to be really interesting to see how these rates are going to impact not just the buyers, but it's going to impact these sellers. Hopefully not too bad. I don't know. Like with anything in this market, we just have to wait and see. And if you want to learn more about what else is going on in the housing market, I have an awesome video right over here. You want to check that out. Thank you so much for watching me today. I'm Jackie Baker with Coldwell Banker Realty, and I will see you next time.